Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Robotaxis are indeed coming, but it's not Tesla who's leading the charge into the robotaxi space. It's actually a subsidiary of General Motors called Cruise that is expanding the most quickly. They're operating in the most cities and expanding the most aggressively. So today I want to cover exactly what they're doing, what their strategy is, and some challenges that they've been facing recently. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. If you want a deep dive on Cruise specifically, I've got a link to that in the show notes. I did that in my newsletter, Asymmetric Investing. And first, I want to show exactly what Cruise is doing if you're not aware of this company. This is the Cruise autonomous vehicle that is operating today in a number of cities in the US. You can see that it's a retrofitted Chevy Bolt. So it looks a little bit goofy. There's not a lot of space for passengers. But this is really the first step for the company in getting its autonomous fleet on the road. The next step and the vehicle being tested today is the Cruise Origin. That's what's pictured here. This is beginning testing in California, and then the CEO, Kyle Voigt, has said that they will be testing as well in Austin, so expect to see that there. But this is really like a miniature bus. It's built specifically for ride sharing, so it has all kinds of great features like the ability to fit 4 passengers really easily, easy to get in and out, and you don't need a driver. So there's a lot of advantages in building a custom vehicle. They've also got features for things like delivery. This is a vehicle that can be used for a number of other things besides ride sharing. Think about this in off hours. It can be a vehicle that's used for something like DoorDash or Instacart. And then there are even mobility advantages. This has specifically been built to allow for wheelchairs to be put into the Cruise Origin much easier than into a traditional vehicle. So this is the long-term vision for Cruise, is building out this specific vehicle. Right now, like I said earlier, they're using retrofitted Chevy Bolts. What's incredible about this company right now is the pace in which they're expanding. What Cruise has basically done is built its models and its systems in the San Francisco area. That's where most of the testing is going on. At any given time, there's over 100 vehicles that are operating. They're now allowed to operate 24/7 and even take people for paid rides. And the idea then would be that you take that model from San Francisco and you drop it into hundreds or even thousands of other cities around the world. That would typically start with a relatively small area of operations and then would expand over time. So I'm going to get to first the city expansion, because that's what's really happening quickly right now. Most of this information is coming out on Twitter, so that's what I'm going to show here. But you can see that they're operational right now in San Francisco, Austin, Texas, and Phoenix. Those are the 3 commercially operating areas for Cruise, but they're getting bigger. In May, they announced that they were beginning testing in Houston and Dallas. The way that this works is they send their vehicles out and they gather a lot of information about a specific area so that they know exactly where they're going, build their own internal maps, and then will eventually launch to the public. Like I said, Houston and Dallas in May. Then in July, they added Miami and Nashville. And in August, Atlanta has been added, as well as Charlotte. In total, right now, there is 9 cities that Cruise is starting to test their vehicles or has operations up and running. Really close to the end of 2022, that number was only 1. They only added Austin and Phoenix late last year. So this is a really quick expansion path. The other step for expansion is to increase the amount of space that's available for taking Cruise rides. Typically, when Cruise launches in a city, they're going to launch with a handful of square miles. It's not going to be available everywhere. Typically in a campus area or a downtown area, that's where they're going to start. But then they expand that space over time. This is CEO Kyle Voigt announcing in August that they were expanding the operating area in Phoenix by 20x. So again, there's 2 vectors for growth for Cruise. They can grow into more cities. Currently this year going from 3 to 9, and they can expand the space that is available. Kyle Voigt said in the most recent conference call and General Motors call that it's possible for Cruise to operate thousands of vehicles in any given city. Specifically in San Francisco, he said there's about 10,000 ride-sharing vehicles, and it's possible that Cruise could get up near that number. Now, remember, a Cruise vehicle is going to be operating about 20 hours a day compared to a typical ride-sharing vehicle, which is maybe only a handful of hours a day. So should be much more efficient. Also said that costs are coming down really rapidly, and there's line of sight to $1 per mile in a cost, What's unique about Cruise is they have a very different business model than a company like Tesla. Tesla is trying to sell you a vehicle and then also autonomous software on top of that. It's not really clear how their ride sharing system would work if they're going to build some sort of robotaxi, which has been talked about for years at this point. With Cruise, you have a very clear business model. The idea is to basically make a company like Uber fully autonomous. This should lower the cost structure and potentially increase the size of the total addressable market. Because again, you control the supply of vehicles when you own the vehicles yourself. That's the relationship between Cruise and General Motors. Cruise is the technology company building this autonomous technology. General Motors is helping build the vehicles and helping finance Cruise. So there's a very clear business model there. This is one of the criticisms is always that it's geo-fenced, but remember that that's the same way that Uber started. Uber started in typically downtown areas. You couldn't just take one anywhere, drive it across the country. That was not the point of Uber. It's still not the point of Uber. With Cruise, you're trying to make transportation as a service. That's the disruption that's happening. Now, the challenge for Cruise is that they have had some safety issues over the last couple of weeks. There were a couple of high profile accidents in San Francisco, one where a fire truck ran into a Cruise vehicle, another where a Cruise vehicle was rear ended, may have been making a turn from an incorrect lane. So there are definitely growing pains that are going on right now at Cruise, especially in some of these areas where they're trying to scale the number of vehicles that they have. This is not going to be a straight growth line for a company like Cruise, but they are getting robotaxis out there. They're testing them in the real world. There's no driver. They're taking payment for their service. It's a real business model that's being built. That's what intrigues me about this robotaxi service. I think we're on a path to over 1 million robotaxis, potentially even by the end of this decade. So Cruise is a massive growth story. The way to get a piece of it as an investor is through General Motors. GM owns about 80% of Cruise right now. And I think that's what makes GM a high potential stock. I'm not particularly excited in them selling vehicles, but I'm very excited about the potential for Cruise. So what do you think? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.